Welcome, dear traders. After a three-week decline, the US stock indexes gained momentum last Friday, closing the week in the black. Traders resumed purchases amid increased risk appetite. As a reminder, risk aversion has been widening on stock markets for 3 weeks. Watch our video review and find out which sentiment prevailed in today's Asian session and how it affected stocks. Let's start. Massive sell-offs on stock exchanges began in mid-August, triggered by worries about economic slowdown following the Fed's aggressive tightening. Now the uncertainty persists as inflation keeps climbing. Analysts also assume that Wall Street could experience a technical recovery this week, as the shares have again become extremely oversold. At the same time, many Fed policymakers have recently voiced their strong commitment to sharp rate increases to curb soaring inflation. The Fed chair, speaking at the Cato Institute on Thursday, confirmed that the regulator would act strongly on inflation until the job is done. Powell hardened expectations that the Fed could deliver a third test rate 75 basis point rate hike later this month. It means that the likelihood of a change in the monetary policy is extremely low. Nevertheless, investors are expecting CPI data for August, which is due on a Tuesday. Investors prefer sitting on the sidelines ahead of the CPI report, even despite the Fed's hawkish course. Analysts expect further growth of the US dollar regardless of inflation figures. Even if the consumer price index tumbles, it will only confirm the Fed's hopes that the inflation fight could be done without the very high social cost. The central bank still has a lot of work ahead to push inflation to 2% from 8%, so the US dollar will have plenty of drivers for a rise. Yet the US dollar index has already sunk today to 107.82 versus its main rivals from Wednesday's high of 110.79. The greenback is currently extending losses amid an increase in the euro and the pound sterling. Both currencies are growing thanks to the hawkish policies of the ECB and the Bank of England, and in the Asian session it kept dropping lower, trading in the range of 107.83 and 108.86. While the US dollar is declining against the euro and the pound sterling, it's still rising against the yen, the main outsider of the currency basket. However, its increase looks quite modest today compared to Wednesday's 24-year high of 144.99. The dollar-yen pair is trading at 142.72. However, the US dollar continues to exert pressure on the yen, so the pair is trading in the upward channel of 142.00 and 143.49. The yen, sensitive to the key rate gap between the Fed and the Bank of Japan, edged lower due to rising US government bond yields. In the Asian session, the 10-year Treasury note yield reached almost a 3 months high of 3.365%. A sharp fall in the yen is fueling uncertainty and worsening business conditions in the country. Bank of Japan Governor Haruhiko Kuroda and Prime Minister Fumio Kishida discussed this issue at the meeting. When the yen is moving 2 to 3 yen per day, that's a rapid move, Kuroda said. And he also added that it's undesirable. The regulator will watch the exchange rate moves carefully. Similar verbal interventions, as well as statements about the need to take steps to limit its decline, have been repeated several times, and they were voiced again this weekend. However, the Bank of Japan continues to stimulate the economy. For this reason, analysts are casting doubt that verbal interventions will help the yen. The support and coordinated efforts of the Fed and other major central banks are needed to boost the yen. Right now, regulators worldwide are trying to rein in galloping inflation, hence such support for the yen seems unlikely. This is why the pressure on the yen will only escalate. Analysts believe that at the same point, the Bank of Japan will have to move from words to dips and adjust its ultra-loose monetary policy. The RC is also up today amid rising stocks and the falling US dollar. Its growth is slightly subdued because of drop in oil prices and tough coronavirus restrictions in China. However, it maintained an upward movement into Monday's Asian session. The AUD USD pair is trading in the bullish channel of 0.6808 and 0.6890. It has already climbed to 0.6886. Its rally is likely to persist until the release of the US CPI report on Tuesday, and judging by the market sentiment, some investors are still paying zero attention to Fed policymakers' remarks about their commitment to monetary tightening and its possible impact on the economy. And this week, the US Consumer Price Index and retail sales data are due, and the UK is going to unveil its inflation and GDP figures. China is projected to reveal its industrial production and retail sales data. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. See you soon.